So for those of you who don't know me, my name is Ben Douglas and I'm a financial planner and partner at Belmores. So I'd just like to welcome all of you tonight. Thank you for making the effort. Everyone that's here and the people that are Zooming not here. We've got some fantastic speakers to speak tonight. First will be Damon from Vaneck on everything cryptocurrency and Bitcoin. I just want to be really clear when I'll recommend anyone buy Bitcoin tonight. So this has come from several conversations with clients we've had over the years. And really part of our role as a financial advisor is to educate you on your journey. And with an asset class that's, well, I checked today before I came from work, $3 trillion US cryptocurrency. It's worthwhile just knowing the basics. So Damon will talk about that, and then we'll have James from Munro Partners. Munro we've been using for about 5 years. He'll talk about all things international and about their fund. With Donald Trump at the helm, it's definitely going to be a rocky road, but not all negative, and I'm sure he'll talk a lot about that. And then at the end, will be Phil from Performance Property. We've had an affiliation with Phil for 20 years or more, and given our clients, really good results in the property market. With interest rates starting to come down, I'm sure that's going to lead to a lot of buying opportunities around Australia over the coming months and years ahead. So every presenter will talk for about 20 minutes. There'll be time for questions afterwards. So if you want to hold out, and then we've allocated about 10 minutes of question time. Bar will be open after we finish, so feel free to help yourself out. And tonight really all about giving back to you guys. You're clients of ours, so I really hope you enjoy the night. So Boyd, try to come and introduce Van. Thank you.
It works. Just got
this one working. Yeah. All right. So my name's Boyd. Thank you for that introduction, Ben. So I'm one of the finance planners at Belmores. We've already kind of introduced Damon, so kind of taking my thunder. Thanks for that, Ben. But I'd like to introduce Damon from Vaneck. So Damon started working there in 2015. He's led the business development management sector of that business in Victoria, Western Australia, and Tassie. And tonight he'll discuss Bitcoin, the evolution of it, blockchain technology, what that is, and the rise of Bitcoin ETFs. So whether you have any interest in Bitcoin or cryptocurrency or any knowledge, I think it's worth listening to what he has to say, because as Ben said, it's a growing asset class and there's a lot of, hype around it. So we want to understand if this is something that you need to look or understand at the very least. So on that, I'd like to introduce Damon, if we can just thank you together.
See how I go with the microphone? Actually, can everyone hear me okay anyway? I've normally got a fairly loud voice. Now, this will be the third introduction myself. So I'll introduce myself. My name is Damon Gosen. And I actually want to introduce myself in terms of how we're going to talk about Bitcoin tonight. So my career in funds management has been about 20 years. So for the first half, I was an investment analyst. So I'd actually look at share funds, fixed interest and bonds, property, that sort of stuff blended into portfolios. And so all the kind of real traditional finance types of topics, which isn't what we were talking about tonight. For the second half of my career, it's been doing that, but it's been on the business development side or sales side for Vaneck. And we've got 44 ASX listed ETFs. I'll tell you a bit more about our business in a moment. If I exclude our Bitcoin fund, my job on a day-to-day basis is to talk to the likes of Boyd and Ben, other financial advisors in the marketplace, stockbrokers, investment analysts and portfolio managers at institutional clients, And I'm there beating the drum in terms of why our funds should go into portfolios, why owning quality companies in international equities makes more sense and should deliver an outperformance over the long run, why owning emerging market bonds is a good idea in a defensive portfolio. So my job on a day-to-day basis, 99.9% of the time, is focused on really pitching the merits of an individual investment strategy. What I want to do tonight, and maybe I should put the dreaded disclaimer up here, Bitcoin is relatively new. I want to go through the ins and outs of it tonight, but I'm not standing here as the director of sales for Vaneck saying everyone here should be buying Bitcoin or anyone should be buying Bitcoin. That's not the intention. I can't do that legally. So the disclaimer's up there. None of this is personal financial advice. Speak to your advisor, read the disclosure documents. It's more about education around what is Bitcoin? What are digital assets? What's driven that growth in that space? Why is everyone talking about it? Why are you reading about it in the newspaper? And how investors are potentially using it in portfolios. So tonight, why is Vaneck talking about digital assets? How a blockchain works, how Bitcoin works, what it is. A bit about Bitcoin adoption, because it is certainly gaining momentum in terms of becoming a more mainstream asset class. And then a bit about the operational side of how people can get exposure to that if they wanted to. So just quickly on Vaneck in Australia, we manage about $23 billion across 44 ETFs, which are across every asset class. International shares, Australian shares, we've got fixed interest funds, we've got a gold fund, gold miners fund, and we're the fastest growing exchange traded fund provider in the market. So 23 billion total group assets globally is about 180 billion Australian dollars as well. So a very major firm that's been in business for about 70 years. What we like to focus on is beyond the normal approaches to investing. So providing innovative, forward-looking solutions to things that a lot of investors don't have exposure to, and asset classes that are underrepresented in portfolios. And examples of that might be things like China shares, gold bullion. For a lot of investors in Australia don't own gold, and there's a good role in a portfolio. And arguably, there's a greater and greater case for the use of digital assets or things like Bitcoin as a separate investment case. This is the owner of our firm, Jan Vaneck. So I'll actually start with a quote from him. So Vaneck was founded in 1955 by Jan's father, John Vaneck. At that point, his focus was on, and so it's a New York-based funds management group, on international investing. That's in 1955, international being outside of the US. In 2025, most Americans don't think outside of the US. So this was very, very rare at that point in time. And he was a great scholar and followed certain economic thought around inflation, and could see the major issues that were happening there in the 1960s and coming into the 70s in the US. And so the first fund that he ran was converted into a gold shares fund, because you couldn't actually legally own gold bullion at the time. So he expressed his view on inflation with gold companies. And that was around the time when the gold price went from about $35 to over $800. Gold stocks did incredibly well. He made a name for himself, and that's the history of the firm. But we understand to our core that investors need a hedge in their portfolios if and when governments lose control over the money supply. When US spending was out of control in the 1960s, my father launched the first gold share fund in the US, even though gold had been pegged against the dollar for about 190 years. Investing in gold bullion was illegal at the time. 3 years later, the peg broke. And Jan draws parallels between that phase back many, many decades ago and what's going on now, where the US is running major structural government deficits, enormous amounts of debt. And that's very topical at the moment, obviously in the US as well. But he sees digital assets as being part of the mix and something that investors should be looking at. And so we have been involved in this area for a very long time. So 2017, we set up a digital assets or cryptocurrency or Bitcoin part of the business. We've got now close to 20 investment professionals in our New York office focused purely on this area. We run funds in the US, in Europe, across lots of different cryptocurrencies. And we also have a ETF in Australia, a Bitcoin ETF, and we manage about $3.5 billion US across this whole area. So this has been a big focus for the firm. And so just a little bit of a timeline in there. We were the first fund manager in the US to actually file for a Bitcoin ETF. You might be aware that at the start of last year, after many years of the regulator there, the SEC, the Securities Exchange Commission, saying no to Bitcoin funds, all of a sudden the green light was given. Vaneck and a handful of other big fund managers were able to launch ETFs tracking Bitcoin, and they raised incredible amounts of money. The investor appetite for that was there. So that's just a little bit about the firm's history. In terms of digital assets, 10 years ago, if I thought I was going to be giving a presentation on Bitcoin in Yarrawonga in 2025, not only would I have said, my question would have been to that, what is Bitcoin? I don't know what Bitcoin is anyway, let alone thinking this. So this is relatively new, but in that time, it's become quite mainstream. So there's some very large endowment funds and sovereign wealth funds that are investing in digital assets. In Australia, AMP in their super fund, they've actually got a small portion. They've been making a lot of noise about this. So I think it's something like 0.3 or 0.5% of their overall fund invested in Bitcoin. In the US, big groups like Morgan Stanley, their advisors put a portion, a part of the asset allocation, a small percentage, into Bitcoin. So in a fairly short space of time, it has very much become mainstream with very large investors. So at that point, that's kind of a bit of the history there and our involvement. In terms of now getting into the nitty-gritty of it, so a blockchain. So take a bit of a side step here. So and Bitcoin is founded on a blockchain technology, and a blockchain, there's a lot of detail on that slide up there. Effectively, it's like a distributed ledger or a database in there, and every record on that database is connected to the one before. So it's a record of transactions storing data in blocks linked together in a chain. We've got the kind of how it's done there. So block 51 joined to block 52, which is the same bit of data, and they're all linked together. Every 10 minutes, all the transactions are verified, they're cleared and stored in a block, and then it must be linked to that preceding block. Every computer on that network has to verify it, and that technology is very, very, very secure. And it's the point of this is it's a digital asset is effectively is using this blockchain technology away from central authorities like central banks and governments. And Bitcoin was the first cryptocurrency, and I'll get onto that in a moment. So how a transaction flows onto the blockchain. So let's take Bitcoin. People that are investing in Bitcoin on a Bitcoin exchange, there's a transaction is requested and authenticated. At that point, a new block is created that represents the transaction. That block is sent out to all the nodes, which are effectively like Bitcoin miners. So if you think about a gold mine, the picks and shovels, this is computing power that's actually doing complex mathematical equations. In there, those nodes validate the transaction. They are rewarded in fractional amounts of Bitcoin. So not for doing that. and then the block is added to the existing blockchain. So after that kind of trade is settled, the update is distributed across the network and the transaction's complete. And nothing can ever change that there. So that's kind of the flow. Now, Bitcoin came about, it was founded on this blockchain technology. Came about, and if you look at the timing there, so no one knows who actually invented it. Satoshi Nakamoto, that's the pseudonym given for the persons that were behind Bitcoin. This came about in 2009. And if you think back to that time, that's effectively tail end of the global financial crisis. And if you can think about what caused the global financial crisis and banks and everything, you can imagine there wasn't a great deal of trust at that point in time in the banking system or in banks or in governments that had proceeded over this collapse of the global economy. And so that was, I guess, the ground where having that transparent, non-centrally monitored, non-centrally controlled type of currency, that's where that actually came about. So a Bitcoin blockchain is a distributed ledger that guarantees transparency, predictability, and immutability, so it can't be changed at all. So, and eliminates the need for central banks or governments to actually play a part in it, which was part of the key features that I'm going to go through now. So no banks or central authorities. So unlike traditional currencies or fiat currencies, as they're called, which are issued by central banks, and the money's created and goes into the money supply, and oftentimes it's created to fund debt and everything as well. It's decentralized. So there's no government or country or central bank that is controlling it. It's all peer-to-peer. It's all recorded. It's all transparent, and people can see that in terms of the transactions. There's limited supply, and so this is one of the reasons that a lot of people refer to Bitcoin as digital gold, in that there will only ever be a maximum of 21 million Bitcoin. So at the moment, there's 19 million that have been mined, or in circulation, and the 21 million will be reached, they predict, around the year 2140, believe it or not. The rate at which Bitcoin is going to be mined effectively, or that is able to be mined, it kind of halves around every 4 years, so it gets slower and slower in there. But that's one of the characteristics of Bitcoin. There is limited supply, and so from a price perspective, if there's a lot of demand and limited supply, then obviously prices go up, and vice versa as well. If there's not that demand, and there's been times where the Bitcoin price has been spiraling downwards, as you'll see in a moment as well, the opposite can happen. And then immutability and security. And so the Bitcoin network makes it nearly impossible to suppress access or deny transactions. This is just the last few years in there, and you can actually see that huge growth. So Bitcoin ownership into the hundreds of millions, and this is just through to the end of 2024 as well. A lot of that growth has come in more recent years as it's become easier for investors to access Bitcoin. In very recent times, I guess there's been a lot of talk around this because the incoming Trump administration, President Trump and a lot of the people he's appointing are seen as being very pro cryptocurrencies and Bitcoin. There's a view that the US government will start keeping a reserve of Bitcoin as well. So that's seen the price action appreciate of late as well. But how we see investors using it, so a currency substitute. It is, in day-to-day spending, it's not really there. You don't go down to your local cafe and buy a coffee in Bitcoin. Theoretically, you could. There are some transactions that happen that way. It's probably grown a little bit, but it's still a fraction of the system. In terms of diversification, Bitcoin does behave differently to other things. So shares, property, bonds. So there's a growing body of evidence, and I'd say the jury is still out, but there's a growing body of evidence that Bitcoin offers some diversification benefits in a portfolio as a long-term investment. So if it does become mainstream and the demand grows and grows and grows against the backdrop of limited supply, or finite supply, then it could offer great trajectory from a returns perspective as well. Liquid and accessible. Bitcoin trades on exchanges 24 hours a day. There's so many different exchanges there. We obviously, with $3.5 billion in digital assets, and the bulk of which is in Bitcoin, Vaneck as a firm trades it, and it's one of the most liquid asset classes around. We can transact enormous amounts on there. As an inflation hedge, these aren't Vaneck views. We're not saying you should buy Bitcoin as a hedge against inflation. We get clients or investors saying that. We read about that. 2009 it came about, so it's about 15 years of history. I think the jury's still out on whether or not, so it hasn't really seen a full cycle on various different types of economic conditions and inflation conditions. So I think that's a little bit questionable. And as a momentum asset, well, for sure, the momentum tends to get carried away at time. And so Bitcoin has experienced, I think the word volatility is missing from this, more volatility than other asset classes. So you can see this over the history there, these huge price appreciations, followed by very large drawdowns, and then another step up. So it has been immensely volatile over the time that it's been in existence. I'll give away my taste or questionable taste in different movie genres here, but for the Will Ferrell fans in the room that have watched Talladega Nights, The Ballad of Ricky Bobby, effectively what this slide is actually showing is you ain't first, you're last. Bitcoin, over the however many years there are there, 10 plus years, if those that can't read this terribly well, Bitcoin's the orange square. These are calendar years. What you can see is in every calendar year, it's either been the best performing asset or the worst one. Hasn't been really any in between in there. And so that's against, we've got all the mainstream things, global equities, emerging market equities, Australian equities, property, bonds, so on and so forth, in their gold as well. So yeah, I dubbed this the if you ain't first, you're last slide. In constructing portfolios, you should be looking for asset classes that can diversify, that are doing different things at different times. So we talk about correlation here. So if for instance, you looked at where global equities and Australian equities meet somewhere down here, 0.68, that means they're pretty highly correlated. So if the global equity market is down a long way, chances are Australia's down a long way, and vice versa as well. So a correlation of closer to zero is uncorrelated. Means they're doing different things at different times. And one of the characteristics over a relatively short time frame with Bitcoin has been, against other asset classes, it has done different things at different times. And so from a portfolio construction perspective and portfolio theory perspective, that's the sort of thing that asset allocators like when building portfolios. In terms of how investors are getting exposure, now we're an ETF firm, so obviously we'll say an ETF is the best way to get exposure. Over the years when we were lobbying the SEC in the US to actually approve Bitcoin, their reluctance obviously was about investor protection. Our view was, you're not protecting investors at all. They're not going to not buy Bitcoin. they will just do it directly on unregulated exchanges where fraudulent activity happens, or where people will lose the actual passwords or the key to their wallet as well. And so our view is much of a structural story around the actual structure of an ETF. And so a Bitcoin ETF compared to direct ownership, the ETF, they're regulated. So our ASX vehicle is regulated here in Australia, but also feeds, I'll come to that in a moment, feeds into our US fund that's regulated. There we trade during ASX hours. You can buy it if you're owning Bitcoin directly, you can trade whenever you want. From a fees perspective, it's very simple. It's we charge a management cost of 0.45. Direct ownership, a lot of people say there's no fees associated with that, but when you do some digging on all the exchanges, it's very opaque. There's network fees, transfer fees, all sorts of other fees in there. But the main one is on the storage and the custody. So has anyone heard, hands up if anyone's heard of stories of people that have lost apparently millions of dollars worth of Bitcoin because they can't access their digital wallet? Yep. So that seems like a pretty obvious flaw in direct ownership. I can barely remember any of the passwords in all my different accounts anymore. But with a Bitcoin ETF, that hassle is taken away from the end investor. So the custody is what we want to kind of talk about. So this is most Bitcoin presentations or articles that you read will be talking about the investment case for Bitcoin. It could go to the moon, it could go to zero. That is the reality of it as far as I see things. But the structure of the fund is the most important piece. So with custody, we have institutional custodians. So we've got two, Gemini and Coinbase, which are enormous custodians of digital assets in the US. The Bitcoin is physically held. It is, it's insured. It's also stored in it's called cold wallet storage, which actually protects it even further because it's actually offline. And that is what makes it so much better. So cold wallet versus hot wallet. Hot wallet means you're connected to the internet and therefore susceptible to actually being hacked. Cold wallet is they're kept in special, almost like think of the nuclear codes or whatever, special security facilities where they're offline, never exposed to a digital network as well. So safely stored. So in terms of our fund in Australia, so we listed this in June last year. So the Vaneck Bitcoin ETF, which trades on ASX under the code VBTC. It's actually, I've got the management fee there of 0.49. I think when I sent this through to Ben a few weeks ago, that was the fee. It's dropped to 0.45 in that time. There's about 200 million in assets in the fund. But what that fund does on ASX, we purchase units in our US listed. So VBTC owns units in our US listed Bitcoin fund, which trades under the code of HODL. HODL physically owns the Bitcoin under those custody arrangements that I just mentioned. And so it's just as a gold bullion fund that's physically holding gold will move in line with the gold price. A Bitcoin ETF structured like this will move in line with the Bitcoin price. And if you've been in it from when we launched the fund mid last year to now, Bitcoin's done very well in that time. In the last couple of months, it's had quite a sizable pullback. There is an enormous amount of volatility, but you get what's written on the tin. So that really was all I really wanted to cover in terms of a bit of the background around Vaneck and digital assets, bit of a quick summary of how Bitcoin operates and how it's used, and then some of the important things we think investors should be considering if they were to go into Bitcoin, which is do I go and set up a Bitcoin trading account and potentially get hacked or lose my password, or do I just do it in a fund knowing that it'll move in line with the price of Bitcoin? So with that, thank you very much for your time. Ben mentioned there'll be questions at the end, so yeah, I'll grab my